Tuesday the 19th of June 2018, 12:06 London, Alliance News. The following is a summary of top news stories. Tuesday Companies Debenhams issued another profit warning as it lowered its profit expectations for the current year for the third time, providing further evidence of what it called difficult times for UK high street retailers. The department store expects pre-tax profit for the financial year ending September 2 to be in the range of £35 million to £40 million, down from the market consensus of £50.3 million and £59 million the year before. The company said a background of increased competitor discounting and weakness in key markets led to trading in May and June being below plan despite weak comparatives. Debenhams said like-for-like sales for the 15 weeks to date were down 1.7% and its 41 weeks to date like-for-like sales were down 2.1%. As a result, Debenhams is planning for a material reduction in financial year 2019 capital expenditure. Profit warnings also were issued by retailers Food Asylum and Hornby, while Bon Marche was more buoyant amid online growth. McCarthy. The retirement house builder said its full-year outcome was always heavily dependent on a strong spring selling season. The company expects 2,100 to 2,300 legal completions, down from 2,302 the year before. As a result, McCarthy. The company said the ongoing difficult market conditions and the lack of any additional government support for the retirement housing sector harmed performance. The company's order book is £67 million ahead of last year at £706 million, but this is lower than management's expectations. It is, McCarthy. The plumbing and heating products distributor said trading profit, which excludes exceptional items and the amortization and impairment of acquired intangibles, rose to £356 million for the 3 months to the end of April, up 17% from £304 million the same period the year before. Revenue for the period grew by 10% to £5.08 billion from £4.61 billion, of which 7.1% represented organic growth. Ferguson said the regions of US and of Canada. Underlying pre-tax profit for its year ended April 30 rose by 16% to £862.1 million from £765.1 million the year before due to strong performance in its Sun Belt business, both in the US and Canada. Taking out the impact of amortization and exceptional items, pre-tax profit was up 21% to £927.3 million from £793.4 million. This was on double-digit revenue growth to £3.79 billion from £3.19 billion the prior year, as rental revenue rose by 20% to £3.41 billion from £2.90 billion. Adjusted pre-tax profit fell slightly short of analyst consensus for its year of £934.7 million. However, revenue emerged as the outperformer, beating the £3.67 billion forecast. Markets. London shares were lower as fears of a trade war between the US and China intensified. Ashtead was the worst blue-chip performer, down 5.5%. Euro was down against the dollar after European Central Bank President Mario Draghi was cautious about the timing of its first interest rate hike in many years. Wall Street was indicated for a lower open, with major stock indices pointed down 1.1% to 1.4%. FTSE 100 down 0.6% at 7,587.35. FTSE 250 down 0.8% at 20,837.57. AIM all-share down 0.7% at £1,094.60, down at 1.3175 United States dollars, 1.3246 United States dollars. Euro down at 1.1544 United States dollars, 1.1607 United States dollars. Gold, flat at $1,279 United States dollars and 4 cents per ounce, $1,278 United States dollars and 30 cents. Oil, Brent, firm at 74 United States dollars and 95 cents a barrel, 74 United States dollars and 40 cents. Changes since previous London equities close. Economics in general. European Central Bank President Mario Draghi said the bank will remain patient in determining the timing of the first rate rise and will take a gradual approach to adjusting policy thereafter. At a conference in Sintra, Portugal, Draghi said the bank stands ready to adjust all instruments as appropriate to ensure that inflation continues to move towards the target. He concluded that monetary policy in the euro area will remain patient, persistent and prudent. Draghi observed that the economy continues on a growth path and inflation is gradually returning towards objective. Uncertainty permeates the economic outlook. Beijing immediately vowed retaliation after U.S. President Donald Trump late Monday said he would impose a 10% tariff on another $200 billion United States dollars worth of Chinese goods, in a further escalation of the trade row between the economic rivals. The Chinese Commerce Ministry accused the U.S. of practicing extreme pressure and blackmail, saying it was deviating from the consensus reached by the two parties' many consultations, and had disappointed the international community very much. If the U.S. became irrational, China would have to take strong and comprehensive countermeasures, it added. The UK government faces another battle to appease Brexit rebels in the Commons after Lords again backed giving MPs a meaningful vote on the final Brexit deal. The to and fro over Parliament's role as the UK leaves the EU will return to the Commons after peers inflicted another heavy defeat on the government on Monday. They backed an amendment to the EU withdrawal bill, tabled by Viscount Hailsham, which would require the government to allow MPs to vote on how it would proceed in the absence of a Brexit deal by January 21 next year. MPs will now vote on whether to adopt the motion, which was brought in after pro-EU rebels led by former Attorney General Dominic Grieve accused the government of reneging on measures they believed had been agreed to stave off a rebellion last week. German Chancellor Angela Merkel meets French President Emmanuel Macron on Tuesday amid growing pressure on the German leader to achieve an EU-level solution on illegal migration by the end of the month. Merkel and Macron, her most important ally in Europe, are meeting at the German government guest house Meseberg Palace in Berlin to prepare for an EU summit on June 28 and 29 that has become a deadline for Merkel, set by her own interior minister. On finding an EU fix, the US and South Korea have suspended planning for joint military exercises scheduled for August, the Pentagon said, following a promise made by Trump at his North Korean summit last week. Consistent with President Trump's commitment and in concert with our Republic of Korea ally, the U.S. military has suspended all planning for this August's defensive wargame. Freedom Guardian spokeswoman Dana White said, "We are still coordinating additional actions. No decisions on subsequent war games have been made," she said. Trump apparently surprised his Asian ally South Korea as well as the U.S. military when he announced the cancellation of joint military exercises last week following his meeting with North Korean leader Kim Jong-un in Singapore. A Space Force is to be created as the sixth branch of the U.S. military, Trump announced. "It's not enough to merely have an American presence in space. We must have American dominance in space," Trump said as he ordered the Department of Defense to establish the branch. "We are going to have the Air Force, and we are going to have the Space Force. Separate but equal," Trump said at a meeting of the National Space Council. Currently, many of the military's space-related projects fall under the Air Force. Trump also said he will sign a directive on setting up a framework for space traffic management to deal with congestion in the Earth's orbit, arguing current regulations are out of date. By Arvind Gunjan. Arvind Gunjan at AllianceNews.com. Copyright 2018 Alliance News Limited. All rights reserved.